Okay, welcome everyone to this live webinar on SB Trade Desk. If I could just get a quick sound check, guys, that the audio and video feeds are working properly, we will jump right in. Gert says, all good here. Jonas, great to see you. Eileen, good morning to you as well. Pooja, Gert, welcome aboard. It's good to finally be here. Tiffany, thank you for that as well. So, we are seeing some movements as we open up the U.S. trade session here. Futures markets just coming online. Looks like the S&P is trading pretty heavy here ahead of the open. Here's the relative performance looks like so far versus the greenback. So you're seeing that broadly. We are seeing some losses for the dollar. The yen being one of the biggest gainers on the session, up 1%. Swiss franc up 0.56. Euro similar on the gains. Aussie has been kind of benign today. Up just to 0.1%, but we'll take a look at that trade as well. So let's jump right in. First thing I want to do, guys, is just take a quick look at the last couple of scalp reports and take any questions that you have. Obviously, this is our first intraday webinar for SB Trade Desk, so your feedback is going to be paramount. And feel free to throw out any questions, trade setups you guys are looking at, and we will dive right in. So first things first, here's what yesterday's piece was on, and it was on the Aussie CAD. Now, just a quick housekeeping before we get into it, guys. As far as the intraday session page is concerned, first of all, I do appreciate all your patience. There's going to be changes going on to the site, guys, as we go live on January. You might see some changes aesthetically to the website, but definitely your feedback is more than welcome. As far as the intraday section is concerned, I try to keep you updated on this main page for intradays on what I'm doing day to day. The specific trades we're looking at, shifts in our biases. You'll notice that the arrow that was there for the bias has been removed. We're having some issues with people on Internet Explorer. Eileen, I know that you were having that issue. That should be resolved at this point. But the point being is this. I will give you the setup. I will give you the bias that we're looking at on the initial trade. But one thing I want to note is this, guys. Everyone's going to trade these levels differently. Okay? This is the Aussie Kiwi. We'll go over this one in a moment as well. But as far as the levels are concerned, there are guys who are going to play the breakout of this trend line into that resistance. There are guys who are going to wait for that resistance at 108.56 to get short. The most important thing that we're stressing here are the technical levels on an intraday basis. Eileen says, Firefox, your page looks just right. Thanks. Hey, I appreciate that, Eileen. But for those of you who have been coming to the scalp webinars on Daily FX, or if you've been following for a while, we're trying to highlight the main key technical levels that we want to watch for on an intraday basis. So a lot of discretion is used as far as which one of these levels you want to play. So I hope that answers some questions. Again, all the newest posts will be right here. Okay, and if any of these posts are being highlighted on the daily page, you'll always see the link to it right at the bottom. So let's jump into the Aussie CAD. Here's what we were looking at as we went into the close of trade yesterday. I put a similar report up on Daily FX. Obviously, Daily FX is not going to have any more of the actual scalp targets and the key threshold table, but the setup is very similar. So what we're looking at is this. That 94.37, 94.46 level is really big as support. And the premise of the trade is this. Look, you're coming into a major area of support. There's a lot of technical factors there. You have the pitchfork resistance or the median line bisector from the September highs. You have a parallel from that same high. If you take it down to the low that we made in October, that's there. You have a 100% extension off the decline from that same high. You have a 764 retracement. This is from the 2013 low. And then you have the open of the year and the January lows for 2014 all stacked up here. Most notably is the 2010 trendline support. Okay, so as you come into this region, momentum is flattening out. You look for that topside trigger in momentum. You look to see if you can get some sort of rebound. Now, inevitably, we would be looking to sell that rebound. But near term, the shift or the risk for a bounce here definitely is what we're focused on. Here's what the intraday chart looked like yesterday. Again, you had a near-term trendline resistance from the 28th of November. That also broke on this move here. Nonetheless, the opening range for the week has held. Okay, and our suspicions yesterday were correct. We said that 95.25 right into that 94.58 level is going to be the opening range for the week. It's exactly what panned out. We defended this region, came off an overnight trade, found support again at that main key threshold, And this, guys, is when the opening range for the week becomes a playable operate. Okay? The opening range for the week taking place just above a key support. That's your ideal scenario, or the opening range taking place just above a key resistance. Even on the near-term chart, you have this Andrews pitchfork bisector from the highs, which also came in right there at that support. Okay? So the way you want to read these charts, guys, is that this is just going to be a map of the essential setup that you were looking at there. Okay? So yesterday we were trading right around that 95.22. That puts you right under this level. If the level is highlighted, it just means that it's a little bit more of a significant threshold from a technical standpoint. It might be a longer-term trend line. It could be a high day close or a low day close. But I just try to highlight the levels that might be a little bit more significant as you get through. So here's what the current chart looks like for Aussie CAD. All right. You can see a nice defense of that barrier twice now. Again, an overnight trade. Like I said, we did come right into that region. Nice rebound. Never closed above, or below rather, that S1. So we're still going to try to see if we can get that bounce going. At the end of the day, we need to see the opening range for the week break to the upside. And that would necessitate a break above that 95.30 level we pushed yesterday. Here's what the intraday chart looks like for Aussie CAD. Okay, so again, the opening range for the week, very, very clean, right above key support. You pushed in that basic 236. This is just off the high we made in that late November swing. And again, came back, tested the opening range low. That is held. We're still looking to buy dips. What will make our buy dip mentality, or what will give us conviction on that buy tip mentality is this. The momentum, you see this rally? Every rally finds resistance at 60, finds resistance at 60. Again, for those of you who've been with me for a while, you know that this is something that we've looked at for years. You know, the typical mentality that, you want to sell when markets are overbought and buy when they're oversold. This is just not, not the way you want to materially play this on a day-to-day basis. In strong downtrends, you'll notice that the RSI signature will typically find resistance at 60. Resistance at 60, keep looking lower. Resistance at 60, keep looking lower. Resistance at 60, keep looking lower. When you see that 60 break to the upside, and on a turn, which is what we think is happening here near term, then you want to find momentum support at 40. And you can see that in strong uptrends, even as short a duration as this one, break into overbought, momentum support at 40, keep looking higher. Momentum support at 40, keep looking higher. Right? And price action panned out pretty well. So, getting close to being a little bit more of a conviction trade here. You still have, this is the near-term operative embedded pitchfork. This is just off the highs that you made for November. Okay. So again, on the daily chart, just to give you some perspective, guys, you're looking at this broader pitchfork off the September highs, but within this stretch, there is the embedded Aussie CAD formation from there, from that same November high. So it's important to keep yourself in context and where you are sort of in the trade. So I'm still looking, the same setup looks perfect to me, guys. I mean, I'm still looking for the break above 95.25, 95.30. This is the conviction trade, in my opinion. If you get through this buy sector, we'd look to play a correction. The major first near-term resistance comes in at 95.75, 95.66. And again, watch that 2010 trendline support just below that 94.40 level. Comes in right around 94.20. If that breaks, that's sort of the invalidation level for the upside. Okay, this is 2010 trendline support. So, momentum trigger on the upside also is pending. Okay, so 95.66, 95.70 would be the first topside target. Again, that's also going to be the swing lows that we made for November. So the scalp chart here, the levels are very, very clean. We'll just need to see if we can get that break of the weekly opening range. Any questions on yesterday's Aussie CAD setup, guys? Any questions on the methodology or anything that is in the reports? Now's your time to throw them out. Again, we'll be doing these webinars every day in the new year, guys. Really look forward to it. I'll be doing 4 a week. Jamie will be doing his weekly strategy session. And want to keep it as casual as possible. So, feel free to throw out any questions or any trade setups you'd like to review. Dimitri says, your analysis are greatly appreciated. Are you personally trading any of these pairs? Dimitri, absolutely. As a disclaimer, right now at this moment I don't have any positions on. But Dimitri, the only pairs you'll see me writing about are typically setups that I'm actually trading in. Now, it doesn't necessarily mean last week on the intraday trade page, you guys might have noticed there was a long list. It was a really active week for me. We were covering 5 different setups. I was involved a little bit in all of those, but at no time am I definitely involved in all of the positions at once, Dimitri. But certainly any setups that you see me post here are either posts that I'm sort of tracking or trades that I'm actually in. Unfortunately, due to the nature of the strategy, guys, it's virtually impossible for me to give you guys a trade-by-trade, ping every time I get into a position. There are positions that are very, very short durations. I reverse bias really quick sometimes if we're trying to scalp into a resistance target and take the other side. So the best I can do is really set up these highlighted levels for you. And again, I'll try to keep you updated on the SB Squawk as much as possible. A quick side note as well, guys, if you haven't yet, please go to the homepage. In addition to filling out the SB Squawk Twitter sign-up form, guys, I do need you to actually request to follow from Twitter. Okay, and the way you do that is you can just come to our Twitter Squawk page and then just simply click follow. All right, and that'll allow you to submit the request on both ends. So just don't forget to do both of those steps there. All right, back to business. So, other trades that we were looking at, the Aussie key. It's a little frustrating for me, guys, because I've been waiting for this godforsaken range to break for literally 6 days now. So if you guys recall, the first setup here we published was on the 1st of the year. We were looking at the Aussie Kiwi opening range for the month, opening range for the week, coming right above key support. So just like we were looking at the Aussie CAD opening up the week here at a key support structure, for the Aussie Kiwi it's even more paramount because now the weekly opening range is the same as last week's and this week's weekly opening range. Excuse me, the monthly opening range is the same as last week's and this week's range. So you're essentially looking at 108.56 into the 107.50 level. We're waiting for a break of this range to give us the conviction and bias. Our suspicion, or the report written last week, was for an upside bias above 107.60, 107.50. So if you're still trading this setup, you're trying to take, every time you get those pullbacks into this key region, you're looking for long triggers, and they would have actually panned out pretty well over the last couple of days. But at the end of the day, we need to get that break above the monthly/weekly opening ranges to get this thing going. Okay? So here's what the Aussie Kiwi looks like now. Okay, we'll start with the daily. So 107.63 seems like just a regular your old run-of-the-mill 786 retracement, but there's a little bit more there. Okay, I'll bring your attention really quick to the close lows that you made here for 2013, just below that level, right around 107.48. You have a nice pivot in price for the first couple of months here in 2014, right around that 107.50 level. You have trendline support, a basic trendline support off the yearly low, all right here. So as we opened up the month, you had a trigger that gave out on the first day of the month, right at support, and you're basically looking at an opening range taking place right above a support structure. Okay. On the near term, I'll show you there's some more here as well, as far as extensions are concerned, but the focus is on this range. A topside break, the initial major resistance you really need to get through is 109. For those of you who have been with me for a while, 109 was the thing that was the level that took us off or invalidated the broader upside bias. Back in July when we broke above this, we tested the opening range high for the year. The next month opening range took place right below that resistance and popped right through. We played the long side. And then again in October we played the long side. Long story short, this is a major level. At 109, guys, you have the 200-day moving average, the 50% retracement of this year's range, a 38.2 from the decline off last October's high. And on the break, it was actually the lower median line parallel. So that would be your first initial target on a break of the weekly opening range. And then we'd look to play an extended one to that pivot if we do get the break. Long story short, we're still focused on this range, which hasn't given out yet. Now, with regard to the opening range, guys, just because it hasn't given out doesn't mean we can't take any positions. It just means that you're all in, all out on the position. Meaning, I'm not scaling out of these positions. I'm not trying to get through a break and bring my stops to break even. On a trade like this, play the range. Okay, support, you're all out. Resistance, you're all out. So here's the open of December trade. Here's the opening range for December and last week. Again, for those of you who are newer to the program, all my intraday charts will have session breaks, vertical lines here for each weekly open. Okay, and with the same respect, the daily charts will have a vertical break for each monthly open. So you can see that since the start of the month, this thing has just held this 108.50, 107.50 range like a charm. Still prefer to get long on the dips, as close as you can to that 107.50 level. We played this once last week. I haven't really gotten involved since, but I'm still looking for those long triggers while above 107.50. You need to clear that topside break above 108.50 to get that move into the key region of resistance, the initial target, which would be right around that 109 level. Questions on Aussie Key. I see Simone here. I'm not sure how to act on the intraday levels. So Simone, everyone's going to use these levels differently. I can certainly show you the way I take these positions. But essentially, we're looking for momentum to give us a trigger on a break of one of these intraday levels. So Simone, on a trade like this, for me personally, I'm a big user of the opening ranges for the week. So the market will put in an ascertainable high or low within the first day, day and a half of the week. You look for a break of that range. Okay, here's the start of the week. You put in a high right at 108.56, which was last week's high. You put in a low right at that key support. If we break the high, Simone, we're constructive into the end of the week against the low. If we break the low, Simone, then we are bearish into the Thursday, Friday session against this high. And in this way, we're able to ascertain a medium-term sort of intra-week bias. Okay? And all you're looking for is a break of one of these levels or a rebound off one of these levels with a momentum barrier or a momentum signal. So, for example, a trigger that we used was this. This was actually really nice. We were talking about it in the scalp webinar yesterday. We came into the opening range high from last week, resistance at 108.56. We pushed some divergence. So price action pushed into a new high. The oscillator made a lower high. And then you had that trigger break. And when we're talking about trigger break, Simone, it's just basic trend line support and resistance, just as you would in price action. But you can also do that in momentum. And there's nothing magical about these triggers. Again, I always stress this, that, guys, all oscillators are backwards looking. All oscillators are lagging. And therefore, they will not tell you what's going to happen. They've told you what's happened. But when we're looking to take an intraday position, when one of these trigger breaks coincides with a reversal or rebound off resistance or a break off support, something of that, it has to coincide with a break in price. And when that happens, it is a near-term signal. So, for example, this move below the trend line here, break in momentum, coincided with the rebound against 108.56. On that rebound, you had an outside reversal candle. A short is issued here against the highs, and you're looking for about 19, 20 pips per scalp. Okay, that would have taken you right down to 108.20. Does that make sense? Simone, if you're newer to intraday trading, I would encourage you to come to these webinars. We'll be doing a lot of setups and going through, hundreds of trades throughout the month. So definitely, stay tuned. One thing I would say to this, intraday trading is not for everyone. Some guys are going to want to stick with the swing trades that Jamie puts out, a little bit more medium duration if they don't have as much time. I know guys that are working on both of these setups, and certainly me and Jamie, we're taking each other's trades and going all around all the time anyway. So I hope that offers some clarity, Simone. Feel free to throw out any specific questions that you do have. All right. One other thing I do want to know real quick, guys, for those of you who are new to GoToWebinar, at any time, if we're going through the setups and you want to keep these charts for yourself, you'll see in the upper right-hand corner of your GoToWebinar, there is a little icon there for a camera. At any time, you can click on that and take a freeze frame of the shot. So if you need to refer to these levels, you can always have them for at your convenience. Okay, Simone, I hope that helps. Permendra, my man, great to see you in the room. Hi, Michael. When you have time, please look at sterling yen. Certainly will. This certainly a trade that I've been following on a more broader basis. I do want to just bring your attention to the weekly chart for it real quick. So sterling yen, for those of you who read the Daily FX yearly forecast, sterling yen was the trade of the year that I published back in December of last year. We were trading right around this 170.40 barrier. We were looking for a pullback early in the year to get long. The pullback materialized with the first 4 weeks showing a nice down move here. We held this range literally until September. We finally got the range break to the upside, and the first target just got achieved last week, and that was that 183 into 188 barrier. So I think this is a trade that has, not only a very strong fundamental backing, but I do think that, you have also a very strong argument for further gains as you head into next year. The only thing that I noted, I just wrote the 2015 forecast on this, guys. Early in the year, maybe Q1 into start of Q2, I am looking for some sort of more stern corrective pullback, not just a 4-week pullback like last year. Maybe something a little bit more substantial. The focus on that is because of what we're seeing here as how far the days are stretched by consecutive weekly advances. So if you look at this indicator on the bottom here, guys, this is called consecutive bars, and it essentially tells you how many consecutive days to the upside or to the downside the trade has seen. So on this, we're looking at a weekly chart. So right now, we've completed a 6-week stretch to the upside into key resistance. Now, if we materialize and close the year above this median, sure, this thing could explode right into 200, okay? But my suspicion is if we don't fail to hold this into the open of the year, that you do get some sort of corrective pullback. The last time we saw a 7-day rally was right here. That saw a 4-week pullback, like I said, into the start of 2014. Before that, we saw a 6-week rally right here in 2013. That saw a 4-week pullback. Ahead of that was right here in February, early 2012. That one saw another 2 weeks of gains before a much, much more stern correction. So the point being is that every time that we've seen this many consecutive rallies on a weekly basis, whether it was an immediate correction to start off the year, to start off the month, or whether it was a little bit of a delay, then a much larger correction, you're running that risk as you start 2015. So for sterling yen, I just want to be cautious. I love the upside. The bullish side of the trade, I think, still makes a lot of sense. Snap elections that you're seeing out of Japan may have an impact, and certainly a lot of people are looking at what impact that'll have on BOJ policy moving forward, and if they're going to be aggressively really be able to achieve that 2% inflation target. Even if that snap election doesn't go as expected, Permendra, I do think that the broader discrepancy that you're seeing and the divergence in monetary policy is always going to favor this to the upside in the near term. You're talking about the BOE, which is, in my opinion, still one of the most, dare I say, hawkish central banks out there. Yes, the recovery has stalled. We didn't see quite the growth that we were looking for. But nonetheless, once inflation starts rearing its head, the BOE doesn't really have a very good track record with that. And I'm sure they're going to be looking to normalize. So the discrepancy alone on the BOE, which is more in line with the Fed looking to normalize, and the BOJ, which is on the complete other side of the spectrum, I think should keep a floor under this. That being said, just want to show you this weekly chart. This will be published with that report in January for the forecast, so go ahead and feel free to take a picture of that if you want. But, we're seeing the divergence in momentum. We're starting the year with a possible crack below 70 on a weekly basis. That's the last time we saw it, was that 4-week decline there. Before that was back in May of 2013. That saw another 4-week decline. 70 break here saw a 3-week decline. So all indications are that near term, if this thing continues to collapse, and specifically if we make it back below the buy sector, you might get some sort of pullback here, Permendra. All right? Much more broader. This is not intraday, my friend. This is this is a weekly chart, but it's fresh in my mind, so I just wanted to show it to you. Here's what the sterling yen looks like a little bit more of a tighter time frame. Okay, here's what the daily chart looks like. Gert saying it took a short on sterling yen from 189.08, looking for 186.44. Too much. Stop is in the profit. Gert, my man. So you're looking for 186.44. I mean, what do you mean by too much? Stops in the profit. I would probably bring that out, and I would leave it in the profit and let this thing run. Again, you're seeing guys, it's very interesting actually, you're seeing those equities still trading pretty heavy, but the point being is this: I don't have many intraday targets just because of the nature of this advance and how stretched out it's been. In fact, to go back to the same levels, guys, you have to go all the way to 2008 or 2007 at this point, 2008 right here, to find any levels. The only level I would look above here that's not marked is the low that you put in for the early opening range for 2008. That's like 192.50. But let me show you what the intraday chart looks like. I'm not sure if I have one. No, I don't think that's actually two out of the question here, to be honest with you. If we take a retracement just off the December range, and I don't really like doing these mid-level retracements, but I just want to see. Here's what I would say. I would say right ahead of the target you're looking at, Gert, watch 186.80. That's the 618 for the December range, but it's also that swing high that you made on the break of last week's opening range for the week, which was right here. So the first Monday, Tuesday level, you put in this range between 185 and 186.80. We checked that again the next following day and broke through the subsequent day, rallied right into the high. So I'm more inclined to watch 186.80, which is just ahead of the target that you cited, if I'm not mistaken, right? You're looking for 186.44. Watch that first. If that gives out, honestly, I'd probably be looking at these lows, which is right around the 186.30 level, just below the target you're looking at. Gert, does that make sense? I mean, man, you nailed the entry. You nailed the entry. And here is another lesson, guys, on opening range right now panning out. Sunday market opens. You push into a high. It's the high from last week. It holds. You're looking for the market to test a low. Makes a low in early European trade. We try to run and test the high. Couldn't even make it. Another run and test the high. Couldn't make it. This is what I'll consider a break of the weekly opening range. You want to maintain a bearish bias against 189.69 in the near term. Now, if we break back above 188.40, then you're neutral. It's not necessarily bullish. The only thing that would put me back on the bullish side weekly would have to be a break above these highs. It's a really healthy ATR, a quarter of the daily ATR, so even from an intraday trade level is pretty wide. I just don't like that I don't have any near-term targets. In a trade like this, Gert, I want to see a high-low made so I can try to take an extension at least and get myself some targets to the downside. But on a move like this, it's pretty tight to find. Okay. Okay, so one thing I just want to point out is that you've actually completed an exact 1618 extension off the high. So I'd be mindful of 187 right here. It's also that's that big figure, but it's almost this exact stretch low we got, and you have some divergence on the lows here. So into the open of U.S. trade, you might see this thing pop up a little higher. Wouldn't really get too concerned unless you clear out the Asia highs, or the European highs rather. It's 188. Nice little pivot in price there. And then that's the 236 off the lows. So these are sort of the levels intraday I'd be looking at. Bearish below 188.40. The only thing that would invalidate that would be a break of the highs. Let's bring that extension up here. All right. Gert, hope that offers some clarity, man. Nice entry. Nailed it. Cheers, Mike, with the with adjusted with cheers, Mike, with adjust as it nears will adjust. I think you meant as it nears 86.60. Right on, man. Nice job. Nice job. Permendra says, "Thank you, Michael. You are a diamond for me. I'm looking for a long time." Thank you, Permendra. I appreciate that. It's great to have you in the room, and guys, it's great to have our own little gig here. You know, anything goes. Feel free to throw out any questions you guys want to trade or any of the setups that you're in. It's good to be here with you guys. So Dimitri with a question saying, perhaps I missed this. Do you rank which pairs are most preferable from your point of view? I don't rank them necessarily, Dimitri, but when you come in on the intraday trade page, under this section right here, when you first click intraday trades, guys, are the setups I'm looking at. I'm either looking at tracking them or I'm in a trade. All the setups that I will publish will be right here. Okay, the latest ones will be right here. The archive, which includes these, will be right here. If you click on this trade setups, you'll see all the reports. Now, guys, once a week, I will archive the intraday updates so that this way you can go back and say, okay, here's euro dollar, here's what we were following through last week. Okay, here's euro yen, here's all the notes that we put in as we followed through that setup. So the archives are always there for you, but the intraday trades are always going to be what I'm watching right now. You might be talking about the tradability table, and this is also for your benefit, guys. I just wanted to put this on the site because I think it can be helpful. It's not something you want to sit there and watch every day. It's updated once a day, but the point being is it helps you ascertain what volatility or what you should be looking at on an intraday basis. So, for example, if I'm looking to take a position on euro pound, which has a 66 pip daily ATR, I shouldn't be looking for an intraday trade of 50 pips, right? Because it's putting 66 on a daily average. Or if I'm putting a trade on something like Euro Aus or something like I don't know, even sterling yen, on a trade like that where you're putting in 150, 140 pips on a daily ATR, that's something intraday that'll give me a much wider range. It has a better expectation. I know what to expect as far as the volatility on the intraday session concerns. Does that make sense, Dimitri? I hope that answers your question on that. Okay, so let's move right along. So we covered the Aussie Key, we covered the Aussie CAD. Other setups that you guys are looking at, feel free. One thing I do want to talk about real quick is the gold trade. And again, for those of you who are daily FX, we track gold very closely. In fact, on the gold trade, I probably write the most about on daily FX for that setup. Give me one sec here, guys. A little freeze in the. Okay, there we go. I guess we should start with the weekly first. Okay, so here's what we're looking at with the weekly chart, and some of you might find this familiar from last quarter's gold quarterly projection. If you recall, we were trading just below that low week close. So does everyone in here in the room know what LDCs and LDHs are? You hear me and Jamie say it a lot: low day close, high day close, low week close, high week close. It's a simple fact of taking the day that the week or the day that the higher low is made, the week the higher low is made, and taking the close of that session. Well, we were working with the assumption that 1236 was that major key level, and essentially it was set in the first week heading into 2014 with that low stretch into 1179. So we broke through that early in the quarter. We continued to bobble against it. We checked the resistance and moved right into the primary target, and this is where our bias went from bearish initially to neutral. Okay, why? You have a 2010 trend line here. 1 tag, 2 tags, 3 tags, 4 tags. You have a 100% extension from the decline off that late high in 2013 within the confines of the triangle. You have a 1618 from the record all-time highs in 2011, and then you have a key 618 from the 2008 low. All of them, guys, all of those things are stacked up right between 1137, 1151. And this is why, as crazy as it seemed, especially on that outside reversal that we got last week with the bullish call, we get a lot of people who are kind of like scratching their heads asking, how can we get bullish after the decline we've seen? It's very simple, guys. We've come into a major, major floor for gold. Major floor. Okay? And not only that, momentum, having divergence into the lows. Remember, when we're looking at momentum, it only matters the close. Higher high, or higher low, higher low. Lower low, lower low, lower low. Okay? Add to that, there was even a trigger here. I've removed it since, but this is a trigger here that we saw that broke in momentum. Remember, guys, this is weekly, so you put a little bit more emphasis on everything. You broke the momentum trigger, you checked it as support, you moved off, your classic technical analysis. So, again, it's my humble opinion, but I think, heading into the start of 2015, gold might have some legs behind it. Okay? This is the weekly chart. Here's what the daily looks like. Jonas, love the humor, man. It says LDHF, low day, high five. Here's what the daily looks like for gold. So, on the approach into that key region we just looked at on the weekly chart, outside key reversal, meaning it's an outside reversal candle that has stretched into a 20-day high or low. Okay? You made an outside key reversal. This was non-farm payroll Fridays for November. Massive surprise, break to the upside. The thing holds. The subsequent Friday after that, huge outside reversal day. Once again, taking out the previous week's session and then breaking to the upside. To start off December, largest range that we've seen, I can't remember the month, it was since February or something, massive. And again, that completes an exact 100% extension. So, if this is a simple ABC correction, this is the max tolerance that this thing should push through, is 1220. My suspicion, again, is that this thing has been putting in some sort of low here, a more significant low, and on that, I do think that we inevitably push through 1220. Initial targets would be first this bisector, the upper median line parallel, which coincides with the median line off of the 2013 swing high, somewhere around the 13th through the 15th of the month. Okay? And that level coincides with the 50% almost around that same time period as well. Bullish invalidation level, very simple. We called it last week, and it's going to be the bisector. If we break below the median line, look for a dribble right back into your key thresholds. First 1179, 1180, 1164, 1150 would be subsequent targets, but this is going to be, for me at least, the near term, bullish invalidation. That being said, trade still looks constructive. Any questions on gold? Again, I think one of the cleanest commodities, for sure, at least since the start of this year. All right. Okay, Jonas with a question here saying, Euro Kiwi respecting the trend line. I believe there's a milk auction going on today. The milk thing carried Aussie Kiwi last week. Yeah, you actually did see a big impact on that, didn't you? On the pair last week. Bear with me one moment. Okay, I just wanted to check on that for you, Jonas. Actually, it's next Tuesday is going to be the next milk auction. So we'll definitely be attuned to that. Thanks for bringing that up, though. I completely forgot about that. It did actually have a big impact. It's on the 16th, by the way. Thanks. Actually, you caught it too. Let's look at Euro Key. I know that you said earlier in the session that you're trading this one as well, respecting the trend line. So I posted actually a chart on this. I think you responded to it, didn't you, Jonas, on SB Squawk yesterday. Essentially, the focus was on 61.37 to 61.48. That's where the high was made in overnight trade here. That is a nice confluence of 100% extension from the advance off the lows that you made for November and a 786 from that same November decline. A couple of things are up here. Also bring your attention to a basic trendline resistance off of the highs that you made in September. That came there as well. Okay? And yesterday we were riding right above this median line. I think my comment was this thing looks a little tired, but got to stay constructive or something. Long story short, you got a little bit of a pullback and actually a decent momentum trigger on the way up here. That would be a trigger. That would have been an operative one with the break of essentially the U.S. opening range high yesterday. But I think it's vulnerable below this level near term. I do. Watch this trend line here. Jonas, you've gotten so many tags in that momentum trend line. This is basically 4 or 5 tags already. As long as that holds, if you're holding a long position, I'd be watching for this to hold. If it breaks, I probably want to duck out of any long exposure. Not necessarily sure I'd be interested in playing a short just yet. You are seeing the euro actually pan out pretty well. If you're following Jamie's trades, it actually looks pretty good. We'll take a look at the euro in a moment, but a little bit cautious of trying to play the upside past this threshold. I think you look for a near-term turnaround here. You have some momentum divergence, price action pushing to a new high. The oscillator making a lower high. And once we get that trigger break, I think you see a little bit of a correction here. Here's what Euro Key looks like on the daily chart. Okay, so that's that basic trendline resistance again. Could come in line here at some point. But a reason why, again, we've been looking to possibly play the rebounds here to the upside. Been much more interested on the long side of Euro Kiwi for some time. I'll bring you back to the discussion we had earlier in the session, guys. There's your first 40 break. Ever since that low, every pullback, support at 40, keep looking higher. Support at 40, keep looking higher. Support at 40, keep looking higher. Okay, we want to see these breaks into 60. You want to see those breaks into 70. Something that no one will ever tell you in the books is that these breaks into overbought territory are healthy in bull markets. You want to see that. That means that the push behind the trade got so strong that you got that accelerated momentum barrier push right through. So we'll see if we can get this 60 break. There is a longer dated pitchfork formation off the highs from 2013, which come right around 62.50. So this thing does continue a barrier break through this. That's sort of the region I'd be looking at as resistance. But near term, just watch that 786, 618 overlap, Jonas, right here. 61.50 basically is the barrier you need to get through. Hope that helps, sir. All right, let's take a look at the euro dollar. Here's what the majors are doing right ahead of the open. Again, we got 15 minutes ahead of the opening bell for U.S. Here's what the euro dollar looks like. So the support barrier that we talked about at the start of the week was essentially 22.72 to 22.65. Okay, we probed below it. Excuse me, not by much, but it did push through. This is a 618 extension from the decline off the highs you made in October. And this is a basic 88.6 retracement from the lows that you made in 2012. Not a very popular retracement, guys. But I've seen it catch ridiculous lows. Actually, a couple of years ago, I think you call it like the major swing dollar Swiss as well. Long story short, you're seeing the market react to it. Okay? I've been waiting for this topside trigger in momentum. This dates back to the highs you made in momentum for the year back in May to really get the validation. It just so happens that that momentum resistance trigger is also the former support trigger. So if we see a topside break here and a break above this, you look correction anyway. At this point, I am looking higher, but I'm only looking higher into this trendline resistance, which currently comes around 125.25 or change. It's just been a very, very clean reaction lines. If you've been following Jamie's setups, he's had these on there as well. So we'll see if we can make it up into that region. Here's what the intraday chart looks like on the euro dollar. Okay, so there's your Sunday open. You push again into a new low, 22.46. There's that 22.72, 22.60 that we're looking on the daily chart. A little bit of a push deeper. Breakthrough. This is the opening range high for Asia Pac. We tested as support. You push right through. Initial target's 123.97. Well, the initial target would have been 23.58 and 23.97. There's that trendline resistance I'd be watching for. So I think as long as you stay above 23, this region here, guys, 23.25, you look to buy dips in the euro. Again, inevitably, longer term, we'd be looking to sell that rally, but not right now, or not yet. I'd look maybe for a push into 24.40, 24.30, right around here. And that's actually an area where I'd start to look back on the short side for the euro. Actually, I think Jamie's looking at the same thing. Let's check his trades. Yep. So he's looking for a run into, we didn't get into 22.30. He just missed this. We were very, very close. But he says, especially if we didn't get to that, you look for a run to 24.40, which would be a nice resistance and a very nice area of which we could start to look back on the short side. So I'm still of the mindset that that's the game plan you want to work with here in the euro dollar. Next, but last but not least, the British pound and the crosses there look also very interesting. So here's what the sterling looks like on the daily. You know, this is another one where the opening ranges have been really, really textbook. Last month's opening range for the month took a little bit of a while to break. It actually didn't break until the 12th here, but what a run. So again, momentum divergence. This one actually is giving a trigger break, it looks like, to the upside. Remember, all these oscillators are based on the close price. You don't necessarily want to make any assumptions until the market closes that session. That being said, 57.20 is my line in the sand. I really don't want to touch sterling until 57.20. Either reverses as resistance or breaks. Here's what the intraday looks like for sterling. Okay, it's starting to get a little messy here. You can see that formation break, which initially looked like it was going to give us a run, has just been riding a support on the way down. So again, a setup I haven't really been focused on is not going to be in my headlight for some time, unless we get above 57.20. But I suspect you still have more downside to go here on the pound. A pound cross, if you are hellbound on trading the pound, I was interested in, or I've been interested in, is pound Aussie, and you might have seen this chart tweeted the other day as well. Here's what pound Aussie looks like intraday. All right, so we've been holding this same pitchfork, guys, for literally almost a full month now on the intraday charts, literally. So here's the November 15th, November 16th low. You can see resistance, support, support. Median line's been very, very clean. It's just this week that we've been getting a little messy as we go through the HDC, or the high day close. Okay, now that also coincides with an 88.6 from that same decline. And that was right around 89.60 right here. So this is a retracement of the entire 2014 range, guys. 88.6, and the high day close comes in just below that 190 handle. Okay, you saw the reversal take you through the median line, right back through. It was accompanied with a break in momentum. Okay, and at this point, you start to look lower, below 189.70 near term. Near term. Now, in a trade like this, guys, where it's just Tuesday, I would be treating this entire move as the weekly opening range. Okay, and that adds validation. Again, your weekly opening range is coming up against a major resistance. A break through that, you have all the more conviction on pushing the longs. With the same respect, you're thinking rebound off this, so a break of the opening range low, which will take us out of this month-long formation, would be a nice correctionary play. Okay, and in such a scenario, guys, just tack on a quick retracement, and then you look to play the downside targets. I can't do that yet because I don't have validation that this is a concerted high. Once I do, though, we'll play that retracement to the downside. But this one's been in my scope since the start of the week, just because I was really interested to see if we're actually going to make it through that 89.70 barrier. Looks like a hold for now. Jonas says, I'm impressed by the run in Sterling Oz. Remember, we are looking at 180 as resistance in the webinars in November, right? Right? Yeah. I think it's going to be an interesting year for the pound next year. I really do. Despite what you're hearing, it's going to be very interesting to see how long the BOE can really kind of just, status quo. And I bet you they're going to have to move, if not in pace with the Fed, maybe even ahead of the Fed. So, especially on these crosses, with the Aussie doing what it's doing. Listen, the Aussie guys, by the way, I'm sure in his webinar, Jamie showed you this chart, but the Aussie's in trouble. We made a pretty big break last month. Here's a weekly chart of the Aussie dollar. below 85.40, this thing's at major risk. That level was the 50% retracement of the rally from the 2008 run. It was also the exact lower median line parallel from a stretch from the 2001 lows, and even from the decline off the 2011 high. Lower MLP right there, all coincided at 85.40 on that break. We actually rebounded pretty strongly on it in early November. Then that crashed through. It's exactly what you expect to see. So we went through the 2010 low week close. That was 84.60. The next target was the 2010 stretch close, and that's almost where we bottomed today. The 2010 close low. That comes in at 82.11. Today's low so far, 82.23. So you could find some support that might charge some rebound, but in general, guys, it's not looking too good. Even if you look at this from a momentum standpoint, guys, from the 2011 highs, any breaks above 60? Nope. Breaks up 40, 60 hold. Breaks up 40, 60 hold. Breaks up 30. Uh-oh. Right? Last time we broke 30 on the weekly chart, momentum was right here. And that saw a drop from 95.70 in that same year into 88.60. So certainly the risk for complete, or continued push lower here in the Aussie materializes. Near-term support just above that 82 handle. So Jonas, just to add to that, right, it's adding more conviction on that. And although the pound has sort of been a lackluster, definitely a weaker player versus the dollar, this is a cross, I think, Sterling Oz is still a cross that's very appealing to me. All right, here's what the daily chart for the Aussie, by the way, looks like, guys. 81.95, just below the 82 level that we looked at in the weekly chart. It would be a 16.8 exactly from that high. So we'll see. Mina, Aziz, good to see you in the room. U.S. dollar index, please. Coming right up, sir. So this is the Dow Jones FXCM dollar index. Here's what it looks like. We didn't tap out at that 86. 11,500 is essentially where this thing found, the high. The high day close at this point is going to be right here. So I'm going to go ahead and highlight that level. Yeah, looks like it's ready for a pullback to me. Mina, let me know if you have any specific questions on this, Mina. Do you have something that you're looking at? So this is what I've been watching. And again, actually, for those of you who have been in the webinars, I haven't really been a fan of the dollar index over the last month or so, I'd say. last month it was really hard to do anything. So for those of you who are trading stateside, obviously we don't have access to trading this asset, but it can be a very helpful indicator of what the dollar is doing in and of itself. A nice graphical representation of base dollar movements. It's a much more cleaner index than the ICE dollar index. It's at its inception was an equally weighted index of the Aussie, Euro, Sterling, and Yen. So on that premise, you're seeing today broad dollar weakness. Okay, this is all stronger against its major counterparts today. The dollar is weaker against everything. I'm not surprised to see this thing pull back. The only thing I don't like is I just don't like where we topped on this, Mina. I like the high that we run into to have some sort of technical significance. I didn't have anything until 11,058. Therefore, I'm a little skittish about trying to get too aggressive on the shorts. You don't have anything, really reference to go on beyond that. You do want to note a couple things. You've been putting some divergence on these highs for the month. Momentum break sub 70 in and of itself is a nice near-term trigger. And on a weekly opening range, it looks like it's actually just broken to the downside. So if you take the weekly open, which is right here, you put in a high yesterday, you put in a low in U.S. trade right before the close, I would count this as the opening range break for the week. I'd be looking lower below 11,450 just into the close of the week. Nothing too crazy. In fact, if we tack on a quick extension off that, you're sitting on 100 right now. Watch out. I'd be mindful of that. Could be an operative play right now. Yeah, this zone's pretty big here, so watch this as we head deeper into the session. Should offer some support. If that gives out, honestly, you're basically looking at this run right into like 11,400 again. Yeah, not much ahead of that. Maybe 11,425 is a soft target, but that would be the play here. Basically, you want to stay bearish below this region near term. It's been, guys, you have to keep in mind as well, even if you get a pullback, this thing has been so strong. Look where we've come just since July. Okay? So keep that in mind. If you heard that, that was the ring for the U.S. market. So we're kicking things off right now. Guys, I have a question from Jonas saying, are these webinars going to be on a 1-hour schedule? Jonas, we'll do them as long as you guys need. We're here for you. As long as the questions keep coming, we'll do the webinars. But typically, to answer your question, yeah, we'll try to keep them to an hour. So, guys, if there are no other questions today, we're going to go ahead and wrap these things up. Again, this was our first run. Looking forward to doing these on a more normalized schedule as we head into 2015. Guys, I can't ask enough. Your feedback is invaluable for us, so please do feel free to throw out an email with any feedback you have to info@sbtradedesk.com. Jonas says, I have a 5-hour question. I guess it's going to be a long day then. And also, guys, aside from the regularly scheduled webinars, we will definitely be doing event risk webinars. So, again, in 2015, releases of major economic data prints, the central bank interest rate decisions from the Fed, all things that we'll want to cover in a live basis with you guys and tell you more up to date what's going on, very like a DoD type fashion for event risk. With that said, I want to thank everyone for their attendance today. Again, this will be archived, so if you need to review anything that we covered today, find that post will be in recent posts under the intraday trades. Best of luck trading, guys, and we will see you next week. Cheers.